Thanks, SOSV, for the intro. Very excited to have this panel today on crossing the Series B void. And I'll be joined today by Beth Esponnette, who is the co-founder of Unspun, Max Huisman, who's the co-founder and CTO of Prolific Machines, and Anders Forslund, who is the founder and CEO of Aerospace. Super excited for this panel for a variety of reasons. We at Sightline Climate track a lot of the climate tech funding trends, and in particular, this past year, the first half of 2024, saw a pretty significant drop in funding, about 41% compared to the prior year. In particular, the Series B stage has dropped about 24% compared to the prior year and has been on a steady decline. So I'm particularly excited to be joined by this panel who have all managed to buck that Series B void trend. Unspun raised a $32 million Series B in July. Prolific Machines raised a $55 million Series B in June. And Aerospace raised $107 million Series B in February. So really excited to talk to you all today about what and how exactly you all bucked that trend. So maybe to start off, would love to do quick introductions and briefly understand what your company does. Beth, over to you.
Awesome. Thank you so much, Kim. So Unspun is a company that is trying to reconsider how we would set up the apparel industry, and namely manufacturing, if we were to do it today. The industry right now, it is based off of a machine that we invented in the early 1800s, the sewing machine. There's so much technology that's been developed since then. So we have invented a 3D weaving machine, so basically taking lots of new technologies and then our own technology in order to realize a machine that can take yarn and turn that into final garments. So it's a new way of being able to manufacture as products are needed and try to avoid waste, and then eventually get to a circular model. You can make products and then you can unmake them at the end of life.
Great. And Max, what about Prolific Machines?
Yeah, Prolific Machines makes machines, but more importantly, the most prolific machines on Earth are probably cells. And we control cells with light. And by controlling cells with light, we can make them more productive and make better products. So think about things that cells make that we know and love, like antibodies, drive nutritional protein, but also the cells themselves bring us for cultivated meat. And being able to control them more precisely than we can with existing methods, we can make products cheaper and increase the quality for both.
And last but not least, Anders.
Yeah, so we're Hard Aerospace. We build electric airplanes. So our first product is called the ES-30. It's a hybrid electric aircraft that flies about 30 passengers in commercial traffic. So we can fly all electrically, routes that are up to 125 miles and 500-mile routes with our hybrid system. Where we see significant fuel savings even at the longer routes. We're about 5 years old. We just a month ago rolled out our first full-scale demonstrator, and we're going to be flying that in April of next year. And then looking at 2029, so before the end of this decade, for entry into the commercial service.
Very exciting. Congratulations. And that actually brings me to my next question, which is talking about milestones. Sounds like you guys just celebrated a pretty significant one. Putting it into the context of the Series B, what sort of milestones did you have to prove at each stage of funding, particularly the seed, the Series A to Series B jump? And how did those milestones shift in terms of what investors were looking for?
Yeah, I mean, the hard part about building an aircraft, I mean, there's many hard parts of it, but it's how do you, it's a product that is like, it's like a big step. It's not something that you can sort of portion out. So you have to figure out a way to create stepping stones that are tangible. And they are not, I mean, I guess one of the big lessons learned that we've had is that, like, you can't build an aircraft in the way that the traditional aerospace companies build an aircraft from a fundraising perspective, because you really have nothing to show for until you're really done, right? So it's a lot of, in the traditional way of doing it, there's a lot of paperwork, there's a lot of, like signing supplier agreements, et cetera. And we've done a lot of that, but there's not a lot of a tangible, falsifiable progress, and you have to figure out a way of doing that. And I think actually that might sound like a constraint. Like, so what we've done is we sort of, for our first Series A, we had a propulsion demonstrator. For our Series B, we had an Iron Bird, which demonstrated not only that, electric batteries can work for aircraft, but also the other systems. And that was what we raised our B on, together with a bunch of commercial milestones. And now for the Series C, obviously its first flight. I actually think that it hasn't been a constraint that has been, sort of, you have to sort of, it hasn't been suboptimal, right? Like actually getting that kind of accountability of having to get sort of, reelected every 2 years, I think is
like
sort
that.
of actually drives accountability. Right. So I actually think we found a better way of doing it than the incumbents.
Holding yourself accountable. I like that.
Yeah.
That's great. And Max, from prolific machine standpoint, obviously a bit different than building an airplane. How did you all think about milestones for prolific?
Well, I was thinking, as others were saying, and a metaphor that a lot of startups use is building the plane while you're flying, right? But I guess others of startup is building an airplane, and they're definitely not building it as they're flying. So for the better. In our case, I think our milestones that we planned to raise around on were very solid. Prolific Machines started out as a cultivated meat company, and I think our technology to be able to control cells can make that so much cheaper that it could actually be a product that can revolutionize the way we think about meat and the planet. But you need to have the moment to raise the funds to bridge the chasm of death of where you need so much money to scale that if the appetite in the market is not there for the risk involved, it's not going to happen now. And I'm glad that we realized that the milestones that we set in the Series A for ourselves were our investors, and we had great investors. I don't think they were wrong. If nothing had changed, if we made a meatball with light and it didn't taste terrible, we would have been able to raise a Series B and go to market with cultivated meat. And we made a meatball with light. It worked. It tasted great. But nobody wanted to invest in cultivated meat, especially because, a lot of other plants have been built and they're not doing the thing yet that they promised. So the lesson for us, and yes, for many other companies, is you can deliver on everything you've promised from really good advice, from really good investors, and still the moment may not be there. So luckily, we're building a platform that can be used for so many other things, many of which are also very important for the planet, but just easier targets for short-term revenue and help us build the platform. So that's what we've done. We've partnered with companies that help us build this platform for other products sooner, and therefore we can demonstrate a path to revenue sooner than we could have with the huge capex need for cultivated meat that is just not there. So being flexible about that and stay in touch with people that told you that you need a certain thing, they will, once they change your mind, you probably should too.
I like that. We got plain, holding yourself accountable. We got meatballs and being flexible. And last but not least, Unspun. How did you think about fundraising milestones?
I guess I'll add pants to the equation there. And yeah, I very much agree with what Anders and Max have said on, like, Anders taking a really big thing and figuring out how to chop it up into bite-sized pieces, and Max, like, thinking about, you don't have to do it alone. Are there partners that can help bring it forward? So we had a similar situation where, not as big as an airplane, maybe not as risky and scary and high up, but we knew it was going to take us 5 years to develop our hardware that would make clothing. And 5 years is just way too long for anyone to wait for anything. So how could we prove to ourselves, to the market, to our investors, that what they're going after was worth it? And the whole premise was making things on demand. And why would a consumer, like, our business model is actually B2B and getting this into the supply chains. And that is really where the pull is. But we wanted to prove that this was also interesting to a consumer at the end of the day. And so within, 3 months, we built some software, because software, it's, I don't want to say easy. I don't want to be mean to anyone, but, like, compared to hardware, it's just faster. So we built software in a few months that would take a body scan and translate that into a perfect fitting pattern for someone. And then we launched that in the market as a direct-to-consumer business. And with that, we're able to raise our pre-seed funding. So showing traction. I mean, traction is always, it's probably the most important thing aside from the technology actually working itself, right? It's like, does this thing technically work and who wants it? And so those are always the things that we're looking at when we're going out to raise. For pre-seed, it was, do consumers want this product? And then does it fit them? It was pretty simple, but that's very early. Then the seed stage, we were then able to show traction beyond just the customer, but getting into B2B with our software. So that was like the next step forward, going up in revenue and then going up in numbers as well to D2C, and also proving that that technology works. At that point, we had a proof of concept machine that was working, that was making product, but there was no way any brand was going to sign on to it. So at least we were able to raise seed on kind of the inkling that there might be something there. And then the A really came with, we needed interest from brands. So we didn't actually have to have any side contracts, but we had to have brands kind of go to bat for us. So our investors, so much of investment, especially in our Series B, we've found is in the due diligence. You can show some contracts. Those are super important, but they want to make a lot of phone calls. We had 4 months. It was probably a little too long, but we had 4 months of due diligence phone calls and people, them digging into
customer references. Yeah.
Yeah. Like my second cousin of my best friend from second grade, how do you find this person? So anyway,
wow. Okay.
No, it really got deep. So I think at that point, very important to make sure that everyone you're working with, like they could get a phone call, make sure they love you. And then going into, and for A, we also really had to show that the technology was working. For B, that's when we really had to show committed revenue, like $150 million worth of committed revenue. Didn't have to be realized yet. That's where Series C comes in, is that committed revenue needs to be very clearly on its path to, well, not even on the path. Chunks of it have to be realized. And we're seeing about 5 to 10 million ARR being expected for that.
That's great. That's great. So we got pants and traction, I'll call it, to summarize it, but different sort of traction milestones based on the stage. And I think pretty interesting to note too how you thought about the different types of business models, B2C and B2B, at different stages of the company. Maybe Beth, sticking with you, as you thought about those different stages, who were the types of investors you targeted and why, both in terms of, generalist versus climate tech, early stage versus late stage, as well as perhaps qualities you were looking for?
Yeah, it's a pro and a con to be in a few different industries at the same time. We're in fashion, hardware. We've gotten money from deep tech funds as well. So initially angels are just everywhere. So you've got a pool of lots of people, and that's amazing. You can just swim in it. Who finds your company interesting? Like those people are great. So angels were easy. Fashion technology in the early seed stages, there are actually a number of funds related to that, and hardware as well. In early stages, there are a number of funds. But as you go higher up, you lose the fashion technology, you lose hardware. Obviously, you lose angels. And so at that point, we start to move for our seed and our A into deep tech, whatever that means. But we've got a few funds that claim that they are deep tech. And then now really solidly in the climate tech space where there are bigger, well, it's still very small, but there's slightly bigger numbers of funds in that space in the B.
Got it. And Anders, on the aerospace and aviation side, who were the types of investors you were targeting, especially in the Series B stage?
Yeah, I mean, I think that we are both a climate tech company and an aerospace company. So there's those two big pools. Those are looking at climate and mobility, and yeah, I think that I was just at an offsite, an event with a bunch of investors, and everybody's recognizing obviously that there is this valley of death between really, like the early stage where you can raise on vision, and the growth where you sort of have to have, real, some, I would say commercial traction, but like offtake agreements, et cetera, and working from that model. So that's where you put in, you're sort of in an uncomfortable place. I think we were lucky enough. We selected really strong partners for our Series A and follow-on investors for there as well, that sort of could lean in and support the B as well. So part of it was coming from our existing investor pool, and obviously as you're looking at the next one, you have to find the ones that are doing like the B and C, and it's a small group. I mean, I was at this event, and it's most people, at least in the US ecosystem, could fit in a very small tent, right? So that means you can build quite personal relationships, but there's not a lot of optionality.
Definitely. And I saw too in your round, there were a couple of strategics, right? There was Air Canada, United Airlines, and you also had European Innovation Council Fund and Breakthrough.
Yeah.
And what we talk a lot about is the climate capital stack, right? It's venture, but it's also, how do you think about government, strategic? How did you kind of rank all those different parts of the capital stack under that?
I mean, I think strategics become increasingly important. So obviously we were thankful for United and Air Canada. And also we're seeing in our space, that it's been the sovereigns that have been sort of bridging this gap a little bit. We raised more from a traditional VC, I would say, for this round. But yeah, obviously, I think we've been lucky that we've still have a pretty good like product market fit. We have a lot of commercial traction, et cetera. Otherwise, I think companies that have more ambitious products than we have, or have been looking more at sort of raising it on the sort of charismatic properties of their airframe, if that makes sense. But yeah, I think you have to look at the different funnels for sure.
That makes a lot of sense. And I think Max, for Prolific as well, you had some corporates involved. Can you speak to a bit how that round came together, and why you chose to work with Tua?
Yeah, but we were very excited to work with Couture, and they I suppose, were always somewhat of an obvious partner from a technology perspective. However, looking back at it, it's always easier connecting the dots looking back, of course, but it makes sense that in a time when there's more risk averseness from investors, the investors that will remain are the ones that have a strategic advantage to partner with you, more so than trying to find the least risk, highest reward way to invest for just financial purposes. So most people that we ended up having final conversations with for this round were strategics. I guess strategics are nice to have at any time. Why not partner with somebody that doesn't just give you money, but also advise and potential customers? But you just have to work harder with strategics. The diligence is deeper. They understand better what you mean. There's fewer of them. So I think in times where there is more risk averseness among traditional venture capital and big investors, you have to start earlier to build relationship with strategics. That's the lesson that we learned. They are the ones that will still fund you because there's more in it for them than just the money.
That makes a lot of sense. Can you talk a bit about what Kitua or Fonterra, the parent company, does, and what does that strategic relationship look like beyond just the capital itself?
Yeah, so this is really interesting. We were really afraid that in this round, since it was going to look different and probably be smaller than what we had originally aimed for to build the meat plant of the future, to fulfill the mission without the straight path to it, you have to be creative in thinking, how do we get there in the end and finance the way there? We always knew that we could develop parts of our platform early to sell other things than meat. But it wasn't immediately clear which strategic partner would help us do that the earliest. And one thing that we realized in talking to Fonterra, one thing that we had thought about for a long time, it's a refinery model for meat. We're already making the cells for the meat, but the cells can make things too. And cows make other things than just meat. So why don't we make dairy products and start with the ones that are really expensive or difficult to make And Frontier, I know, is all about that. They purify proteins from milk. There are some that they know are super good for humans or baby formula, but they can't get enough, at least profitably, from milk. So once we started talking to them and figure out how much would we have to make, how difficult is it to do, is there someone who will take that off? You realize that we could start developing that with them, and then once that will work in the end, we'll fuse it with the meat, and you'll have this whole factory that pumps out not just meat, but also kind of other proteins that we would need. So we would probably have developed that later on otherwise, but the order of events, it depends a lot on who is willing to fund which bit. And I'm glad that we were willing to be creative in that, because that's going to pay for the way there.
That's a great point. And Matt, maybe speaking about those next steps, looking toward the Series C and beyond, right? Obviously, there's a lot of financing and funding that's needed to scale up hardware. What are the next few milestones you're looking to hit? And who do you think are the types of investors within that landscape as you seek to, broaden out the capital stack? Is it going for more venture and growth? Are you looking at more non-dilutive financing options? How do you think about those next steps?
So all of the above, but I think I speak for most of us here that if somebody wants to give us money on good terms, there has to be a really good reason why you wouldn't. But strategics and non-dilutive funding is ideal, and for the position that our company is in now, where we have demonstrated that technology can work. There are a lot of interested parties, but Milliman and the Gates Foundation awarded us a grant recently to develop malaria antibodies with our technology. It's a great application, and if we bring down the price of malaria antibodies, that would be a great thing for the world, and it unlocks a huge market of target customers that currently cannot afford the existing malaria drugs, for instance. And strategic partners can really help you find those unlocks where there's not a market now, but you could create it with your technology, and then your incentives are much more aligned than if you stick with funds that will give you the money, but not a lot else. So we're really targeting those kinds of investors for our next round. We're showing traction in antibody production, biopharmaceutical production, and nutritional proteins. So, and for all of those, we're targeting different strategics that could help us scale this platform. The biotech is expensive, so we'll need a couple more rounds to get to profitability, most likely. And the more strategics we can pick up along the way, the more know-how and support we'll have in getting to that stage. And the bigger the target market, that grows along the way with every strategic partner that you have.
Yeah, definitely. And that's a really interesting note about your products or your platform specifically, is that you can target a lot of different industries and a lot of different strategics with expertise in those industries. Beth, would love to hear from you. You talked a bit about the scaling milestones up to Series B, having 150 million of contracted revenue to show. Looking toward the Series C and beyond, what type of capital are you looking to bring on? What type of investors? And what are some of the next milestones you're thinking about in order to get to scale?
Yeah, fortunately, it's been pretty clear for us because of all of these contracts. We need to fulfill these contracts. And so the next go is to deploy dozens of machines into manufacturers to then fulfill the contracts that we've signed. So that is great and clear. We have started our way down debt financing, equipment financing. That's been much easier than raising a Series B. So if you can go down that path and you've moved as much risk as possible, definitely go towards that. So we are shifting focus towards that, but we'll still be looking towards Series C, and we'll probably stay in the climate tech space.
That's great. The equipment leasing option. And last but not least, Anders, how are you thinking about what's next?
I mean, for us, the big thing is flying this aircraft. So obviously that's all of our focus.
Easy, yeah. Is it easy to understand what it is? Not easy to do.
Yeah, for sure. So that's the big one. But also, obviously, getting to that place where we can start project finance as well is a really big milestone for us. I think we want to get out of the sort of equity led, or standing with one foot leaning too much on the equity raise foot at this point is obviously going to make it really hard. This is a very capital intensive thing we're doing. So yeah, project finance is the way to go.
Awesome. All right. We have a couple minutes left here. So I want to end on a fun question. Speaking from experience, I find it's hard for companies, at least for myself, I find it's hard to celebrate the win, especially when you're in such a challenging environment. So my final question for each of you, and feel free to whoever can start, is how did your team celebrate closing the Series B round? When did you guys do?
I think we took a huge breath and just one moment. I think the moment passed very quickly, but one moment to celebrate. And we have a pretty funny just tradition where we hit a gong every time there's a small win, and I guess a big win in this case. We hit it really hard for this case. So that's just a pretty silly thing. So we go out into our parking lot here and just take all the cars out and everything that's in there and set up a little block party, and then got the gong out.
Oh, that's great. I gotta get me a gong.
Me too.
We did a similar thing, but without a gong. It's a missed opportunity. Where we cleared out the parking lot and just had a big party. We moved into our new building, which is the old Jelly Belly Jelly Bean factory. It's a very whimsical building. When we moved in there during the raise, and there was just not a lot of time to enjoy it. So when the raise closed, we opened it up to all the friends and family, investors and employees, and just had a big party with barbecue, and it was wonderful.
Yeah, I can't even remember how we celebrated it. I know that it was a different feeling than the Series A, where you just felt like you were the king of the world. And obviously, I think almost instantly you started thinking about, okay, what was all the lessons learned here? How can we go into this C? We had a lot of things to work on, and we also really closed, like we really got some of it just before Christmas. So everybody went on to celebrate their holidays with the family. So I guess that was how we celebrated it.
Awesome. It was great hearing everyone's celebration stories. It's always important to do that. Thanks so much, SOSV. Now back to you.